All right, I know what you're thinking. It's a clickbait title. Just bear with me for a second because this is the chart that nobody's talking about. This is something I brought up before back in July when we put in our pi cycle low. Now, this isn't an indicator that's got plenty of iterations. There's not a huge amount of data to back up these signals, but the data we do have from this indicator, it successfully marked the tops and the lows of the entire Bitcoin cycle thus far in every iteration. You got back here in December 2018, you got your pi cycle low, 2018. Yeah, December 2018, pi cycle low, the bottom was in. Come back here to January 2015, pi cycle low signaled, the bottom was in, right? And that brings us to where we're at. July 11th, 2022, pi cycle low has fired off, and we have not made new lows below this range since we have bottomed out. Now, something that happens when this signal fires off is you've got these short EMAs, the green and the yellow, that cross over the red, which is the BTC low long SMA. And once these two EMA or these two moving averages cross underneath this red line, the bottom is in. Come back here, another instance, December 18, they cross over the red, the bottom is in. You come back here to January 2015, they cross over the red, the bottom is in. Now, this isn't the only thing I want to bring up today. It's not something I'm going to hang my hat on alone, but I want to bring up something else, and that is the accumulation distribution oscillator here, because back in August, we broke the downsloping supply line here. Now, previously, if you want to look at this, back in August 20, we broke the downsloping supply line, and from that zone, it was off to the races. Same thing, February 2019, we broke that downsloping supply line, and it was off to the races. We got one here, March 2016. You broke that downsloping supply line, and it was off to the races. Now, that wasn't the cycle low, because we did have a similar signal here, March 2015. You broke the supply line, and from there, it was off to the races. Now, there's another thing I want to point out on this oscillator here is we had from our lows in May of 2020 and last summer, July 2021, we have this trend line coming up, this upsloping support line that if you take a look at it from here to here, we got a back test of it as resistance in May earlier this year. Now, we put in this little double bottoming pattern, and we have sprung back above it, and it looks like we're coming back down to back test it once again. Now, obviously, we haven't shown that we have flipped it into support just yet. You know, maybe I'm jumping the gun a little bit, but I want to show the full combination of variables as to why this, to me, is something we should really pay attention to. Especially coming into this week, whether you're bullish, whether you're bearish, I'm pretty sure we can all agree that there is a move coming, and it's coming soon, right? So if we look at a couple other iterations, like back in February of 2019, you broke the supply line, and coming off of the lows, we did the same thing. We came up, we came back down, and you know, you did a little bit of a check back, and then it was gone. Now, so far, we haven't had any follow through on the bullish or the bearish side. But that brings me to these two other indicators you've got down here, which are the Puell multiple is the first one here. And it's, excuse me. Now, coming off our lows in January of 2015, the same thing. We had this down sloping supply line. You got one touch here, one touch here. And then you kind of got a touch here. You could wiggle this around. It's a weekly chart. It's, you know, it's relative. But the point I want to bring this particular oscillator up for is because at our highs, you're going to be up here in the red zone. At our lows, we're going to be here in the green zone. Now, if you want to line that up with price action here, when you are up in the red, you are at the top. When you're in the green, you're at the bottom. Another instance of that here. Oh, this data isn't really loading here, but the first instance where we are down in the green, that was our low in November 2011. Now, let's fast forward a little bit here to December 2018. Here's you know, our signal in the top, which was the top. Our signal in the green, the signal in the red, and the signal in the green was the low once again, and that's 2019. Now, let's take a look at the top here. Didn't really quite make it into the red in this instance, but you did get a double top pattern, almost almost like a inverse, I mean not an inverse, head and shoulders pattern. You got a double top. Looks like a classic distribution pattern, right? You come up, you come down, reaccumulation, and then you get your right shoulder in, and then it's just down from there. But in every instance, you've got this down sloping supply line that is resistance, 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 support, and then down here, when we're coming off the lows here, you've back tested it as support where it was once resistance. Same thing here, you're coming down, you finally broke above it, you kind of rode it down a little bit, but you eventually diverged, and what was once resistance became support. Again, the key takeaway from this indicator is the exhaustion at the lows here. I've got this, you know, line here at 0.46, which is, you know, kind of coming out of an oversold. If you're, you know, looking at an RSI, that would be the way I would interpret that signal. Same thing, you come underneath this red line. Once you get above it, you're out of the oversold territory. Now, coming off, you know, our February and March 2021 highs, your first two peaks creates this down sloping trend line where it was resistance, resistance. You almost broke above it in November, which was, I'm pretty sure that's where our second peak was at 69,000. And again, it's resistance, resistance, and then we broke it again in July. Now, we didn't get the back test as support. You know, if you want to mess around, you could look at it like this. You've got resistance, 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 and then you back test it as support. So that's another piece of the puzzle here, but that's not the only thing. Now, this is the NVT, right? And it's this set up the same way. You know, your bottoms are going to be down here in the this green territory. Your tops are going to be up here in the red. Now, if we want to pull up the price chart, there's your bottom. That's the bottom. Down into the green again. That's your green. That's your bottom. The top marks the top perfectly. The top here marked the top perfectly. And we are back down in the green territory once again. Now, not only are we down in this green territory, but if you look at every time we get down into this green territory, you get this little M shape, like a harmonic pattern. Once you get down there, you form this little pattern and then it is off. Same thing in January 19. You got this little double bottoming pattern, and this is where there was that nice Gartley that pulled us away from the lows back there in December 2018. Same thing in July. You've got this little M-shaped harmonic pattern. Again, coming off of the green areas I've marked off here on the indicator. Now, another indicator, right? But if you take a look at the pi cycle low, once the pi cycle low has triggered, you come from that point, you kind of get this mean reversion response that brings price up initially to where the red line is, right? So we came from 3,000. You kind of got this magnetism to about 5,000, and once you have crossed over the red line, the next point that you kind of get pulled to would be this white line. Now I want to come back over here because some of the other charts I've been posting in the Discord and on my Twitter have been referencing this $28,000 zone. Now, coming off the pi cycle low, previous instances of this, you get a mean reversion to the red line. All right, it happened back here in, this was early 2019. Same thing after our pi cycle low here. The first zone that you kind of got that mean reversion to was the red moving average. Now, in the instance of where we're at, that red moving average is right at $28,000. Now, after you get that mean reversion to the red line, you go to the white line. Let's take a look at the high, the BTC high long moving average. So hypothetically, by no means am I, calling for this price action, but if this is the low, the first thing that we would expect is a mean reversion to the red SMA, which is about $28,000. Now that could be a zone that we backtest as resistance. It hasn't been backtested as resistance, and if you haven't noticed, on the standard price chart, we just broke below it, and we were out of there. And we haven't revisited it. We haven't gotten a back test of that support level yet. Now, theoretically, again, it's not a prediction by any means, but if we do, if we happen to get the mean reversion play to the $28,000 level and we break above it with confirmation, that's something you would definitely want to see, because that is one of the most crucial levels there is on this chart. That was where we spent last summer. That was where we spent earlier this year before capitulating when the Celsius stuff happened. Our mean reversion zone, now this could change. It is down sloping right now. So, this could be different by the time we get there, but our next zone up would be $73,000 at this time. Now, I'm sure that's probably going to be a little bit lower. I think, generally speaking, from our cycle lows in the last couple instances from the pi cycle low, it usually takes about 500 days to get to this red zone. So about 500 days, this red zone is where the halvening happens. So from our pi cycle low, we could be looking at, if history repeated itself, about 500 days, that would mean, let me see, let me get the exact number here. I don't want pi cycle low from there to the halving, 518 days. and the instance before that, pi cycle low to the halving, 540 days, right? So if we were going to take, again, it's just a thought experiment at this point, right? 518 days, 518, and the other, that's next December. And I think the other one was what, 540. So, you know, maybe between next December, next January is when price action really heated up. Now, this is the S2FX model you see in the background with the dots here, and when they turn red after the blue portion of the cycle, that is when price action really starts to get moving. If you look here, you come down, you're in the green, you start turning into this teal color and then blue, and then once you get to this red zone, which is lined up here with the halving, that's when price action really gets going. The same instance back here, the first halving, November 28, 2012. In this instance, I don't think we didn't have a pi cycle low, but the low to the halving was about 413 days. And when is the halving? Shoot. So right now it says we are on track for April 5th, 2024. All right, 536 days. I mean, it could just be a coincidence. It could be me trying to grasp for straws, but I think the combination of variables is kind of impressive here. Now let's go to a standard chart. We've been watching this pattern. This is a bullish shark harmonic, where typically what you'd want to see, it's a harmonic reversal pattern. You will see these form after a sell-off, which it has. You've got your first low, which is a type 1, and then a type 2, which is your double bottom confirmation low. If we were talking about, you know, the way you'd want to trade this pattern, you'd want to see the confirmation of the low. We've got that. We've been watching. We've got, you know, this is the daily chart I'm on now. You've got bullish divergence forming on your MACD. You've got 2 drives of bullish divergence on the second low and this little low here that was the initial bottom of the shark pattern. So with this pattern, a common retracement from our last swing high, which was up around 48,000, would be the 382 to the 618. That would be a common retracement. If we were looking at this harmonically, this would be considered a bearish bat pattern, which would, once you get past the B point here, you're going to end up seeing a revisit of the 886. And if we line up with the 886, it's about $30,000. You know, same thing, same confluence that we had with the previous chart I brought up. It's the same thing we would be targeting here. And if you were looking at this simply as just a double bottom pattern, you would be looking at something like this. The little local double bottom here, from the top to the bottom, it'd bring you up to the 786, which is $28,000. If you were doing the measured move of the shark, it would bring you up to about, surprise, our common retracement zone, which on the high end is going to be around $32,000. Now I want to bring up the DXY as well. This is another chart that I think it's important to pay attention to right now as well, because we have hit our peak from 1981, which is not only a peak from 1981. And these I've marked off the BTC halvenings and the pi cycle bottoms. Now, if you look at where these pi cycle bottoms come in, the first time that the DXY sees a major, pullback off of an impulsive move up is where the pi cycle bottom comes in. You end up, you made a higher high after that, but that's really where things got interesting, right? That's where BTC was bottoming. That's where the DXY was finding resistance, having trouble. You've got your halvening cycle here. You've got your next pi cycle bottom here, which if you look, you get this pullback at resistance, and that's where the pi cycle low was. The DXY ended up, moving up a little bit, but when the halvening took place, you can see the DXY, that's where it really started to go to the downside. You got this zone of supply, of resistance. You did end up breaking above it a little bit with an up thrust, and then you sold off. Same thing here. You got this initial pullback here. You've got your halvening here, which DXY pulled back. It did an up thrust, and then that was where BTC really started taking off. That was the beginning of 2017. And the same thing here. Back in 2012, you've got, oh, that's right, there wasn't a pi cycle bottom for this one, but same thing, when the halvening came, you sold off a little bit, you did an up thrust, and then DXY pulled back again. Now, if we come to where we're at right now, there's your pi cycle bottom, you've got a pullback, you've got your up thrust, and now you are at the you're pulling back from, mind you, you're pulling back from the 1618 extension of this pullback. So this would be an extreme Fibonacci extension from this pullback. The 1618, 2.0s possible, but we're looking at the weekly chart here, and you've got, this long upper wick. If you look at the lower charts, I think on DXY, you've got a bearish engulfing candle after this. I wouldn't really call it a dragonfly or a gravestone, but you've got your up thrust and you've got your engulfing candle immediately after. And this is where the pi cycle low was, at the completion of a nice ABCD pattern. So you got a lot of confluence in the charts right now, right? There's a lot of stuff going on. If we look at some of my personalized oscillators here, you've got an ADX. That's what this cloud is here, this trend cloud. And these are all available in the Discord. If you want to put these on your charts, just follow the link, and you're more than welcome to use these as well. But this is an ADX crossover, which as of right now has flipped bullish. You've got your stochastic RSI, which is the green and the purple here, and as of right now it is pulling upward. Now in the background you've got this green shading. That is an on balance volume bullish signal. I've got it on actually the background of both of these oscillators here. You've got your MFI up top here, which has bullish divergence from this low to this higher low. You've got bullish divergence there because you've got a higher low on the oscillator, and on price action you've got a lower low. So you've also down here, if you see the background here, this is an OBV ribbon, on balance volume, and right now it's crossing over bullish. Alongside of these variables, you have the BBWP, which is a measurement of volatility, which is also crossing over bullish. I mean, is setting up to expand, but in the circumstances of all of these other oscillators firing off bullish signals, although volatility, this measurement of volatility is not directional, with these other oscillators firing off bullish signals, that's the way that I would interpret it. Now, I want to go back to this chart here. You've got your bullish divergence on the MACD. You've got bullish divergence on the RSI. Again, this is my custom RSI here, the MACD, and you've also got the money flow. This is a money flow crossover. And what I want to point out here is you got these cup patterns forming. When you get these nice rounded cup patterns forming on the MFI crossover, it generally, when they do resolve to the upside into the positive territory, that's where your bottom and your impulsive move away from the range and accumulation range takes place. Crosses to the upside July 21st, right? Same thing. Right now, you've got, this is initially back in December of 2021. You went negative. That's where our peak was, November 21. You've got this nice rounding bottom accumulation. And then March 2022. That's where we got this impulsive move to the upside that gave us that $48,000 top, and that's where we sold off. Come back here, I think there was another iteration of this. Same thing. Once you start sloping up after this accumulation phase on the MFI, I don't have a lot of data. This is on FTX, but same thing. You start sloping upward, you get this nice run into the green, and in this case you ended up selling off. This was the March 2020 dump, kind of a unique circumstance, but if you look what we're doing right now, it's the same kind of thing, right? We sell off, start rounding back upwards, and this isn't a very direct move back up, but you can see that we've kind of got this rounding trend happening here. You got double bottom right down here at the lows. Same thing here. You got a higher low double bottom. Same thing in this case. Usually that's what you end up seeing at the bottom, and then it starts rounding back up. Now, something you'd want to keep an eye on this week is if this starts pulling up abruptly, that could be another indicator that we're about to get some pretty good price action to the upside. Another thing I want to pull up is, if you see on my RSI, I've got these little dots, these little pink dots, and these are a measurement of volatility as well. And when these little dots fire off above the RSI moving average, historically those are lows, sustained lows. They showed up here, right down here low, but they never really made it above the moving average on the RSI. Same thing here. That's Bitcoin tried to move to the upside, but the volatility was so low, nothing really came of it. Same thing here. It was a low, but the volatility dots did not make it above this moving average. You come back here to May 2021. On that low, the volatility dots were above the moving average, and that was a sustained low. Bitcoin ran from that point 113%, 135% from the lows on that double bottom. Another instance, volatility dots above the moving average. That was the 2020 low back in March. Sustained low, obviously. We went from $4,000, $3,000 to $69,000. Oh, this is on the FTX chart, but every iteration of these volatility dots above the moving average on the RSI has been a sustained, and not only a sustained low, but a cycle low in most cases. It's by itself not something I'd hang my hat on, but you see the confluences with everything we've talked about today over and over and over again. It makes you think about it. Perhaps it's something to pay attention to. I'm not calling the bottom. I don't need to be a hero, but it's important because not only do we have these other variables here, but we are back above the 55 EMA, at least on the FTX exchange. And, for the sake of argument, I want to go to the all-time history index and show you another case of this happening. Let's go to our lows. We talked about March 20th, 2019. Volatility dots above the moving average. Generally, what I've noticed is when they show up above the moving average, the signal would be after they disappear. You could look at it as the volatility is derived from, a squeeze of some kind, price action being the pressure to the downside creates a volatility. The same thing happens in the stock market with the VIX. Again, above the moving average, the low is in. Now, if you were using that as a signal of sorts, another way I've used, to get the buy signal, just them showing up doesn't mean, that's where you buy. You could look at it like, hey, once the RSI gets over 40, the bottom's in. Come back here to 2018. The volatility dots are above the moving average. Once the RSI got over the 40 line, that wasn't sustained forever, but that was one of the sustained lows, at least for a while, until it decided to crap itself. Another instance of this happening, I believe, January 2015, volatility dots are above the moving average, and once the RSI got over 40, that would be, your signal. That was a sustained low. Another signal I want to point out on the weekly chart, or I'm sorry, on the monthly. On the 3-day. There was another signal. not only that, I think another way I was looking at using these volatility dots as a way of marking the bottom is when they were above 60 on the RSI, right? Look over here, 60, first iteration of them rising above 60 was our exact low. Over here, the first iteration of them rising above 60 was the March 20 low. First iteration of them rising above 60 was December 18 low. First iteration of them rising above 60 was the January 15 low. First iteration of them rising above 60 even in November 2011. Again, it's not, I think they were above 60 before the low, but again, if you were using the strategy, once you get above that moving average, that would be the low. Or if you were going above 40, right, above 40 on the RSI, that would have marked the exact low. In all of these cases, without fail, once you got above 40, the low was in. Once you got above 40, the low was in. Now, we haven't gotten above 40, right? We might not. So that's something to keep in mind. If you want to complete this signal, you know, if you were using this as an indicator, we haven't gotten above 40 yet, and we haven't gotten above the moving average on the RSI. So that's something to consider, you know, as another form of confirmation. That might be something you want to look for. But even on the weekly here, we have gotten divergence. You know, the only times the weekly has been below 30 on the RSI, December 2018, that was the low. June 2022, so far, that's the low. January 2015, that was the low. November 2011, that was the low. It's just over and over. All of these indicators, all of these variables are all saying that the low is already in. Now, is that a certainty? Of course not. Nothing is ever a certainty, but from the data we have historically, you know, we could be looking at the low. And, you know, something you might want to keep in mind is when we were at 69,000, why was nobody selling? Because the narrative was 100,000. If we were going to 100,000, why would you sell at 69? So now we're at 20,000. But the narrative tells you that we're going to 10,000. So why would you want to buy here at 20,000 if we're going to 10? Do you see the pattern here? Peak fear. VIX has peaked in the stock market. Everybody's convinced we're going lower. Nobody is bullish for the most part. It's something to think about. We're going to know in a couple days. Got one more chart. Not quite done. This is one that, again, nobody's talking about. We're going to put BTC up against the M2 money supply. Right? There's been so much money printing since the 2020 lows that maybe we should put Bitcoin up against the M2 money supply, right? Because right now, everybody thinks we are coming to, well, we got to come back down and we have to back test this zone here, right? And it makes sense. You know, oftentimes when you break a zone, you want to see it retested. You know, they call that a check back. It's confirming that what was once resistance is now support. And we didn't really get that, at least not on the higher time frames. You know, you could see that we've got this ignition candle pulling away from the zone. But if we go against the M2 money supply, look where we're at. We're not at the highs from December 2017. We have back tested this old resistance as support on the very low of that sell-off, and also the pi cycle low. Maybe it's nothing, but it sure is interesting, and it's something you might want to think about. I've got nothing else for you, not today. If you have any comments, if you want to tell me I'm out of my mind, I'm crazy, I'm wrong, we're going to zero, by all means, let me know what you think in the comments. If you do like the information or the argument that I provided today, hit the like, hit the subscribe. I'm making a point of making more of these videos. Normally I save this stuff for the Discord, but I'm gonna, if I get some feedback on this and you guys want to see more of this stuff, again, let me know. All right, that's all I've got, and I hope you enjoyed. I hope I made sense, at least a little bit here. You always got to keep an open mind. Same way that I won't say that we're not going to go lower without confirmation is the same reason why you shouldn't be so convinced that we are. It's just food for thought. Thanks a lot, guys.